20th November 23, Monday, MAO with Kel once again. Now it's time to book some profit off the table. I've been saying this since last week. I've been telling people that as the Dow climbs, you need to take profit. And in fact, last week itself, we saw the Dow basically staggering at the top side of the market. So today, 20th of November, I want you to take profit right now, all right? Because based on what we're seeing on the US unemployment data, hit 3.9%, and based on the Sahm rule, it seems to be a very important point that traders have to be very careful. So I repeat, time to take profit. I'll show you my reason very shortly. Right before that, it's all disclaimer applies as usual, and thank you, AIMS, for the kind sponsorship. Now, first of all, the US unemployment data has reached 3.9%. Now, this is a very critical and very important figure because as you can see on the screen, the low end was about 3.5 back then in about April period, and now it's 3.9. In fact, it's the highest level since. But the question is that, isn't that we're supposed to have a good economy according to Biden? We're supposed to have good things according to Janet Yellen. So things is not really going in accordance, and this is not something that we want to see. And if you look carefully, so the change in payroll has been sliding. It has been sliding. This is not a way that the economy doing well should behave, right? And of course, you look at it right now, the temporary help versus the youth unemployment data, very clear that the temp helpers are coming down. Now, the temp helpers are coming down speaks for itself, because every time when the temp helpers are coming down, you can see that it will be start of a recession. And of course, at the same time, as you can see right now, the unemployment data is going up. So every time when there's this temporary help is coming down, you can see that the unemployment data goes up, and that is a confirmation of a potential recession. And based on the statistics, we are supposed to be in recession right now in October. But of course, as you can see that nothing is changing, and the Dow Jones is 5% off the all-time high. A lot of people doesn't seem to be worried. But if you look at the youth unemployment data, whenever it goes parabolic in the 45 to 35 degrees movement, you can see that it always will lead to a recession. So to me, although we are now still way below the par value, but still a movement like this warrant us to be very careful. And undeniable, the continuing jobless claims, all right, that is happening right now is really scary. Look at it, guys. You can see right now, the continuing claims are still picking up at the moment, and when that happens as well, right, together with the unemployment data, we always will see a recession. So the whole thing speaks for itself, and I believe that the recession will officially kick in by April 2024. Yes, the official recession period. So of course, again, mathematically, you will say that it's impossible because we need to have 2 quarters of this negative GDP to basically have that. But I don't think we will get to see that time. In fact, itself, I believe by April to June, all right, latest is by June, okay, we will actually see the official recession. But before that itself, the market usually peaks 6 months before the official recession. So which means that by right, let's say we talk about June period, then by December, we should see the market peaking. If it's April, that means that the market should have peaked by October, which seemingly from the chart, it shows that. So again and again, I would like to tell myself to be very careful as we move into the market. But of course, many people will say that this is being crazy. I understand that. So let's take a look at this Sahm rule, which is a recession indicator. Now, basically, right, this indicator is tells you about the unemployment data. And once the data go past a certain figure, it will always lead to a recession. Now, this is basically data collected in 2020, and you can see that whenever it crosses the threshold line, we can see that yes, immediate start of the market. But if you look carefully, guys, this is going to be very important, a big eye opener. Before it basically crossed the threshold, you will notice that the market will create a high first. So you can see over here, the market created a high first. Same thing again, we cross this point, the high was here. So basically, before the Sahm rule get into the picture, the market will create a high. So undeniable right now, we are near there, and we have a high recently. So if you ask me, right, I think that it's time to take some profit. Now, do note, this is a chart back in 2020. So I got this updated for you. Let's take a look, guys. This is going to be frightening. As a matter of fact, now the Sahm rate line shows that we are now at this point here at the 3 months average of 3.9, which is 0.5 higher than the lowest level. And that actually is near to the threshold line. And every time when this actually happened, we all know that a recession will come in. This has been there from since 1960s until to date. This indicator has not failed. So with that, right, we can see right now, the last time we saw a 3.4% was in May, and now we're at 3.9. So basically 3.9 minus 3.4 is 0.5. And this is where it gets scary, because whenever the market basically for unemployment data rises by 0.5, that is a consensus level of the threshold level that you need to be very careful. So that means that moving forward to next month and the following month in January, we need to go down below 3.9% for unemployment data. We need to be at 3.8, 3.7, it doesn't matter. But if it stays 3.9 next month, and it goes even higher in this January, this will definitely ring the recession bell, and definitely is all right. We're just going to be seeing recession by next year. So again and again, I'll stress this once again. We are not there yet because the numbers are just hitting 3.9 for the first time. So we need to see at least 2 more months, 2 consecutive months of 3.9 or higher, then things will get very, very dicey. And that's the reason why it's all right. When temporary help basically comes to a point of negative area, it will go into what we call a recessionary level. And we've seen it before in 2000, in 2009, and 2019. So where are we right now? The matrix is showing that we are contracting to the level that the pre-time we saw before there's a recession. So while the market is going up, I understand that it's difficult to tell you to sell the market right now, but a smart person will know that the RSI and the other things are not showing the same fact or matter. Let's take a look. So you can see right now, this is the RSI high, this is RSI the high. All right, this is common point, call that common point, okay? Now, whenever a common point is existing itself, right, we need to check the market. So we call it as A, call it as B, all right? So we lift up the chart, this is A1, this is B1. Now take a look, guys. A to A1, we can see the point that the market take profit. But the thing is that B, if you notice, the B itself, B1 is actually lower than A1. Now, this basically tells me that we have a common point in the RSI, but the market is coming down. So this is actually a bearish indicator, okay? This is a bearish indicator. So what must we see then? Well, the opposite must happen. So it will be like this. Let me change the color right now. What we must see is that if the next time the RSI pulls back and then goes back up again to the same common point, but the market basically goes higher than B, create C itself, then right, if C1 is higher than B1, then definitely for sure it's going to be a very bull market. Okay, this is bull market. So until we see this bull market, if not itself, traders, you need to be very, very careful, because this can actually comes as an indication of a sell in the near term. And of course, to wrap it up, right, we need to check with the TWB indicator, and it's very clear that we have a little bit on the sell side right now. Let me bring the colors in. The market today opened at 34,958, which is trading below pivot 2. Now, this means that if the market stays below OP, it's a classic sell signal, classic sell signal. So the downside can be as low as this point here, which is about 34,379. Now, where are we right now? We are now at 34,947. So that is about 600 points from there. I don't think it will happen in a single day, but of course, if the market can go up by 600 points, who knows? You can see a 600 point downside in 2 days. Okay, the upside itself, right? We can still see upside of 35,000 today to 35,200. So upside wise 35,200, downside is 34,379. But of course, the KSI and the K6 are both now pretty bullish. So I don't expect the market to come down immediately in like a waterfall. I believe that it may stagger a few days to come off. All right. So guys, this is my little advice for today. You make your own decision. And of course, end of the day, you are the trader. You make your own decision, right? This is Cal going off. Sincerely, like and subscribe and share my video. Bye-bye.